Hello, hello, hello. Can you hear me now? Hello, hello, hello. Can you hear me now? All right, cool, man. Well, welcome, Nate, to live stream of March 15th, 2026. um, I'm happy that you could be here. I'm glad that you were able to do, a little recap, a little homework um, to catch up. If you have any questions, feel free to type them. Um, and then I'll try to do my best to answer them as we move on. All right. Um, so to this is the week of March 15th. Um, I wanted to start off by looking at the calendar. That's the most important. We see that tomorrow is a no news day, so tomorrow is a low probability day. Oh, SMT. Well, SMT is. Well, we'll get to that. We'll get to that. It's when because all stocks and futures and everything they're correlated and they they move similarly. Now, whenever it doesn't happen every time, and I don't really use SMT personally myself that much, but I'll try to see if I can show you some examples in this video. Whenever they're getting ready to turn, the market getting ready to turn, you'll have one of, let's say for futures, you have NASDAQ, you have Dow Jones, you have ES. One might take, two of them might take that high. Let's say the market was moving high. Two of them might take a high and one don't. And that would be the lagging. And then with that, you know, that's like your first sign that the market is getting ready to turn. When you have an SMT along with proper time frame alignment, you'll it'll be something that to keep in mind that'll tell you, oh, okay, well, ES went into this gap, Nasdaq didn't go into the gap, and Dow Jones went into the gap. And when you see some type of market structure reversal, you could use that to align with, as a confirmation. Okay, so I'll show you an example in a little bit. So, as we were saying, there's no news until Wednesday. We have core PPI on Wednesday, so Wednesday should be a high probability day. And the news of the week is FOMC at 2 p.m., and where the Fed chair is gonna, do his thing. We don't really care about what he says. We just care about time and align that with our trading processes. And then on Thursday we have unemployment claims, and that's the news of the week. So um, it doesn't mean you can't trade on Monday and Tuesday, especially the 9:30 open. Um, you can still technically trade it because the market needs to do whatever manipulation, but usually by Tuesday after 11, if you don't really get a trade, especially on FOMC, I'm sorry, yeah, Tuesday after 11, um, on FOMC week, its market is very likely to be choppy. Now, it doesn't happen every time. The market is fluid like water. So, you know, we're doing everything based on probabilities. There's days that, you'll come and Tuesday would have moved a bunch, but usually it doesn't. After the morning session, you'll be in a chop fest. Now, if you become like a consolidation trader where you're trading small ranges, you can still make money on smaller time frames. You know, um, 5 minute time frames or lower. You probably could find the setups, but you won't have much follow through. All right, so let's take a look at our charts. Right now, I'm on a weekly time frame. All right, let me align this. I'm on a weekly time frame. And last week was very choppy for most of the week until the high probability days, the news days. What I'm looking at is that I see that the weekly closed near the low. We tapped into our 3 month gap right here, and we left some a volume imbalance up here, and there's also a balance imbalance right here. So we'll be wanting to see if we can put a body in the next couple weeks over here. At least 50% of this area. We want to see we want to see a body, a candle body in here. Now I'm still bullish because we came down here, we rejected. This was the first time. So what we want to see is, you know, even if we come down here, we might come and take out early buyers at this level here. But as long as we're above here, at least above the 50% of this candle, no body on the monthly time frame closes below here, I'm still gonna be bullish. Okay. So let me mark my levels here. We have previous week's low here. Previous week's high over here. And I want to look at the 50% of last week's range as another level. And I like to make my weekly ranges blue so that when I'm in a lower time frame, I could take a look at it. Also, I want to look at the 50% of this wick right here. Right? The 50% of this wick is becoming interesting. As well as, let's see here, let's do the CE of this wick, consequence encroachment, and this wick as well. But that one I probably won't mark it yet. This wick and this wick, 50% are also levels that we want to mark. So we're still in a higher time frame consolidation. Even on a daily time frame, we're still consolidating. We still have this gap up here that's unmitigated. We have buy side liquidity above here, and I believe this volume imbalance right here is on a daily. Yeah, it's on a daily time frame. Right here, we still don't have a body. above here, and then we have another volume imbalance right here. Have a daily gap right here. So if we are to continue lower, this daily gap is going to be very important this week. It's the most obvious level that I can see right now. Here we'll do a daily gap. All right, let me drop down to the 4 hour. So what's important to me? On a daily time frame, daily levels, adjust this. We have this daily gap. This is very important. If we are going to drop lower, as I said earlier, this would be a good area to pump up here and then come down, take these last week's lows, maybe hit the CE, or we can do something like this where we open today, drop, and then come back up. Those are both scenarios that I have in my mind because we are reactionary. If this, then that type situation. So, all right, okay. Let's see, you say basically a reach up into the daily gap and continuation down. Yeah. That daily gap is going to be a nice potential short opportunity. And it could also be, depending on what it does, it could also be a long as well. So we can long into the daily gap as well. It just depends on what structure gives us going in. And there's also a 4 hour gap. Yep, I do see it. I see the 4 hour gap right here. So, yeah, we had a 4 hour gap right here. And yeah, we got a 4 hour gap right there. So, and then we have a 4 hour gap right here. You can see that here. So it could bounce up to here, come up to here, mitigate it. And if it wants to go down lower, it'll go down. Probably, if it wants to go down completely, it'll do something like touch this or go through it, wick it, go back up, hit the low to 50%, reject this area, come back down, go through it, something like that. So we'll just have to go and take a look and see day by day what happens. What else? Here, the last manipulation was up here. Let's go daily time frame. Had a daily manipulation up here. Oh, I think you wanted to see my. It's a big manipulation. I believe you wanted to see my manipulation, not manipulation, my standard deviation settings here. You guys can screenshot this if you would like. You have a question. Does the mitigation require a body formation within the gap or just a wick? Usually, it'll mitigate it. It can mitigate it with a wick, especially if it's getting ready to reverse. It'll give you a wick, and then sometimes when it gives you the wick, and especially if you see that the wick goes through and touch the bottom of the gap, whatever time frame it is, um, and then reject, that's something that you should think about it coming through the next time and going right through it. You could see here. Let's see if I can find an example. Let's see. Okay, so here you could look at this gap, or it didn't go completely through it. This daily gap here, right? You have this daily gap here. It was formed, and this candle opened, wicked all the way above, right, and then rejected. And then this candle right here retraced, dropped lower, and then it came back and blasted right through it. So usually when you have like a wick that goes through, it's like laying like asphalt on the highway, um, and then it'll be smoother to go right through it, and you can see that it just went right through it. Um, Now, does it happen every time? No. As you can see, well, this is not a gap here. Let's see. Let's see. Here is, oh, no, that's not a good one. Let's see. Here, here's another one. You can see this gap right here formed. Actually, it's because it has a volume imbalance. This is called a suspension block. So you would include that as well. So you can see that it formed this bullish gap here. It came down, right? It mitigated majority of it except this part right here. So, and then it left, right? So this area right here wasn't mitigated. So it came back down, went right through it, rejected again. So now it laid the asphalt so that it can go through it. This candle opened, pushed up higher, and then bam, closed right below it. So that's something that could potentially happen. So as far as like, well, on that 4 hour right here, if I see something like this, something like that happen, wick through it, and then it could go up. It could go as far as up here. And if I see market structure shifting, then I'll be looking to take it to these lows down here. And I believe this is an imbalance, this volume imbalance. Probably to 50% of this volume imbalance would be what time frame is this? On a weekly time frame. Yeah, so the 50% of this, I would be looking for it to come into it. Cool. As far as, let's see. Okay, so we have our daily level, daily time frame manipulation here, came here, market structure shifted here on the daily time. You see that it went down to 1.5 standard deviation, rebalanced, and it's just been consolidating. Then it came all the way down to two standard deviation, rebalanced again. So this area is still of interest for me, especially coming off a 3-month gap here. So it could come back down here again, but I still want to see this area get revisited again. So let's see. So we're here. Oh, here, let me talk about quickly I think on Friday, I gave some levels. Here, I'll discuss it here, that I was interested in. And I'll show you what I was thinking. So Thursday is, so the market closed Thursday. Where's Thursday? Okay, so market close here on Thursday. Here, let me mark that up. Market closed here, well, really at 5 o'clock. We'll make that big. Market close here. And Thursday's high of the day was okay. This was Thursday's high right here. Previous day high, and this. Let me go to 1 hour. Oh, I am on 1 hour. So this was Thursday's previous day low right here. Previous day high, previous day low. And I think I was looking at like a 4 hour, no. I was looking at, oh yeah, we were inside this gap right here. We were inside this 4 hour gap right here. Yeah, we closed here. We were inside this 4 hour gap here. And I was still looking bearish. I wanted us to go bearish because we had this was Tuesday was the high of the week. We displaced below Tuesday, right? Closed below this swing low right here, or you could even use this one, but I like this one better. Closed below it here. Then we came up, mitigated this 1 hour gap here and displaced lower. So that kind of told me that, okay, since it was Tuesday, and then Wednesday did that, and we were coming off this 3-month level, and we expanded high, we're likely gonna go lower because this was the high right here, and from Sunday night all the way to Tuesday, we pushed all the way here. So we needed to return to 50% of the range. So when I look at this low to this high, here's 50%. I hope you can see it right here. 50% of the range was right here. Look at it, it hit it perfectly. Okay, that's on a 1 hour time frame. And this is all fractal based on your time frames. So it told me that the high of the week is already in. Okay. So, but if we're going to go lower, we need to rebalance this range. Right. So from here, from this high here to this low over here, we need to go and rebalance this range. And that, which means we have to go to at least 50% of that range. And then I'll be looking for PD arrays inside of the range. And what do I see inside of that range was this gap right above 50%. This 1 hour gap. Right above 50%. Okay, so now I don't know, what's going to happen. I don't know if like London and Asia, going to push up into this gap and then reject. I don't know that. Had it done that, then, New York Open, automatic short. And I didn't know, like, if it's going to just accumulate here, which is basically what it did. And it accumulated, and then it expanded up, broke market structure. And then by the time I woke up the next morning, I saw it somewhere in this area here. And I was like, oh, okay. Market structure shifted. It's probably going to, even if it wants to go lower, which I'm bearish on a higher time frame for the week, it needs to manipulate higher. So that's how I determined that it was likely going to come here. The 50% of the range, and also what lined up was the 50% of the daily candle, which was basically the same thing. Right here. And yeah, so it did that. Let me delete this so I don't confuse you guys. I don't really use replay on TradingView. I use FX Replay. I pay for it, so bear with me, guys. Let's see. All right, so you can see what's 7:30. Let's go a little bit higher time frame. Let's go. So we manipulated lower, right? This happened at what? Look at the time. See the time? We manipulated this low within a macro time, 8 o'clock, right? Yeah, let me go to 5 minute. 8 o'clock. Closed above this order block here. This 5 minute gap, bearish gap, we closed above it as well. Started expanding. If you wanted to do your measurements, the last swing on this time frame, the last swing before liquidity was taken, you anchor your measurements. You can go to the wick, you can go to the body, whichever you choose. Two standard deviations land you right inside of this 1 hour gap. So if you play it on this 5 minute time frame, you can see we broke market structure here. We're coming back into the range. We should respect this 50% of this range right here. We can go through it and dance of it, but we want to respect it. You can see it's dancing, getting in there. Oh shoot, did I? Oops. Okay, so here's what happened. Okay, so now it took out early buyers here. That's what it did. It took out early buyers, which is inside of the London. This is from 3 to 4 is the London kill zone here. So that if you took this trade right here, you would have been up a little bit, and then if you had any other positions, you take a loss. Okay. So we came down even deeper. London kill zone. Now we're waiting. Came back down, took liquidity again. Bam. So this is another liquidity sweep. And you're going to make, I still make these mistakes, so, because I'm not perfect. We're human. Now we have 4 standard deviation up here. And you can see how on this 5-minute time frame, how it goes through, hit these levels, right? Close above 2.5 standard deviation. So now even if it drops lower below here, it's likely going to go even higher versus when here, when I did this one, it made it just almost to 1 standard deviation and then gave up the goods. So look at that, and then bam, hits 4 standard deviations here on this time frame. So if I went to a bigger time frame, 15-minute, I think it's basically the same. Basically the same. 4 standard deviation here on the wick for 4 standard deviation here. Basically the same. And you get to pick your time frames based on, and time frame alignment is important based on like the levels that you're coming from. Say for instance, if you're coming from, this one is a 4-hour time frame, so you need probably like at least a 15-minute market structure shift, which you did get here. You did get it here, but that was a manipulation for early buyers. Took them out one more time, and then you got the market structure shift right here on a 15-minute time frame. Measure your fibs, anchor your fibs. We know that this is target, but all along here you're making money. Like, you know, you only want to be on side. You don't have to reach target to be profitable. All right. Let's see. Oh, you want to see the time and price? I'm sorry. I have a huge monitor. Let's see if I can. Let's see. What's up, Roger? How's it going, man? All right. Okay. Okay. I think you can see the time and price now. Let's see. So you can see. Can you guys see the time and price? Let me raise it up a little bit. There you go. All right. So it dipped down here during the London kill zone, which is usually where the biggest move is from 3 a.m. to 4 a.m. It manipulated down, and the New York kill zone is usually between 10 a.m. to 11 a.m. is usually going to be your biggest moves of the day, and it also happens to align with the closing of London trading session. So yeah, we have midnight price That's important. Where's midnight price on Friday? Midnight price right there. So this is midnight. This is the times that I like to mark. It's important. You can see that we manipulated below it. And then 8:30, where's 8:30? That's when the news embargo, overnight news embargo, are normally lifted, and that 8:30 is right here. And usually, most days when we have after 8:30, market likes to manipulate above or below it, and so if we're bearish for the day, you're um you're gonna get a manipulation above price, above 8:30, above midnight price, into a PD array, right? Our 1 hour PD array right here. And that should happen within a macro time frame. And then you should get your reversal. I think I told you guys that I was looking for 937 low, I believe. So let's play that. Okay, where's 930? 930 is right here. So before, hold on, let me go back one more. No, I normally don't use, let's see, okay, well, it doesn't matter. It manipulate, before 9:30, I like to look for levels. I look for gaps, anything above 5 minutes. So for it to manipulate and to go above here, something that's not so I'm looking on 15-minute, right? I don't see anything on here except here. 15-minute gap. 30-minute, nothing. 10-minute, nothing. 5-minute. Do I have 5 minutes? Nothing. Then 4. We have this 4-minute gap right here. Below price. We don't have anything else. So I'll be watching this gap to see how we trade off of it. And also, there is market maker models, and I don't think I want to teach you the market maker models yet, but I'll give you a little synopsis over it, about it. So yes, let me delete all this. So I'll go to like the 1 hour time frame, right? And I will look at how we manipulate it down, and then we close above. We close above this 1 hour gap here, and then we close above this high, this high right here. Now, on the 1 hour time frame, you have a low, a high, a lower low. So that'll give you your breaker. Your breaker here. So if price is to remain bullish, it closed above this, confirming this breaker on this 8 o'clock candle right here. So it could go through, go in it, but we don't want anything. We don't want a closure below here. But this time frame is kind of big. You can clean it up a little bit on a 15-minute time frame here. So this 15-minute is a little bit cleaner. Now price will, we can allow the price to go below that breaker. We just don't want anything to close. So it can wick below it, right? So what happens here, this is a little bit more advanced. Market closed above, came back down, came into this 4 hour, which was the biggest gap, not a 4 hour, but a 4 minute gap, because we didn't have anything on a 15-minute, we didn't have anything on a 10-minute, we didn't have anything on a 30-minute, we didn't have anything on a 5-minute. So this was the biggest gap that I saw, because there's this gap right here on a 4-minute, but it was mitigated right here, or actually it closed below right here, right? So right here is the only one. As you can see, price respected this level multiple times. It wicked into it, went below it, but look at where the bodies are closing. The wicks tell you, the body tells you the story, but the wicks do damage, because you know when this candle is forming, it's a big old red candle right here. So you might think that it's, oh shoot, it's disrespecting it, and then at the last minute it'll just wick above it. So at 9:28 we're looking, and it should manipulate in here, and then that should wick and actually close below. But remember, this is a 15-minute time frame, I believe. 15-minute bullish breaker, went down. Now this on a, let's see, a 5-minute, is it a wick? Yeah, if you look at a 5-minute time frame, look at this, it's just a wick. So this is what you're going to have to learn. When the market closes below, and then immediately the very next candle closes right above it, it's a wick on a higher time frame. So on the 15-minute, and then blast off, hit target. And kept on going. And then look at this. And then I believe we had 10 o'clock news. And I told the guys, we are looking for, we're gonna sit on our hands, be patient. We want to see if 10 o'clock closes above this 1 hour gap. It's a 1 hour gap. 10 o'clock will be the start of the new 4 hour and a new 1 hour. If it doesn't, I'm looking for this low right here. Actually, it was this 936 low. All this is because the previous day, I knew we needed to go up here. I could be wrong. It could just close above this 1 hour gap, and then we could attack previous day high here. Previous day high here. If it closes above, come back, retest, and go for previous day high. So that's why I'm being patient. And what time I think this is? This is like 9:46. We're inside of macro time. We're waiting. And where's 10 o'clock? Bam. Okay, so 10 o'clock happens. Look what happens. Well, I gave up the. That's why I don't like to use this for back testing. It kind of gives you when you go to a different time frame. So 10 o'clock happens right here. So that candle on the 1 hour time frame is a wick that closes here. Okay. So that tells me, okay, I'm right. And then the low hanging fruit, 937 lows. Yes, it could go forever and you could make $1 million. Is it, are you going to do it every time? Probably not, but we disrespected this 5-minute gap right here. All right, we close below it. Oh, look, and we're also, but we're out. We disrespected it, so this could be a trade because you can actually anticipate this 5-minute gap. If you're bearish, you can anticipate this 5-minute gap getting filled. So if you drop like, let's say 15-second time frame, if you really anticipated it, you went up, market structure shifted right here, change the state of delivery right here. On 15-second time frame, 0 level, you hit half a standard deviation, came back up, mitigated 50% of here to the market structure here, and then come on, man, hit the low of the 5-minute gap, went back up. Come on, man, 2 standard deviations right here. And that could be your trade. I take this trade all the time, and I get out of the market, and by like, what time is this? Like 10:03, man. I'm done for the day, chilling, you know. But of course, you know, you've hit 2 standard deviation here, so you know, on a 15-second time frame, once it hit this, we should get a retracement back if it's not in a rush. Let's look. So here's our retracement, right? Let me take a look at our range. 50% of the range right here, right? And what's the PD array that's in our range or above our 50%? We have this swing high here. We have this high here. Maybe on a 30-second time frame, we might have a gap somewhere. This is there's a 30-second gap here. This is an intermediate high here. Let's see. Yeah, 1 minute gap here, intermediate high. This is could be a possible target. Well, let's see, and it spilled the goods. It spilled the goods from 50% of the range, and let's see, let me show you something. Where's 1015? Okay, so 1015 is right here, right at 2 standard deviation, right? So, and then it chopped up, retracement from 1015 all the way to 1030, 32, and then just gave up the goods. Your macro starts at 1045 again, which is, we're not there yet. Standard deviation on that time frame, and just way lower. But you don't need all of this to make money. If you're on sides, it'll take like a couple minutes or even like a few seconds. 20, 30, 40, 50 seconds. What I want to let me talk a little bit about market maker models. Okay. So this is a market maker model, right? This is called the sell side of the curve. This is the sell side of the curve, right? This is what we call the original consolidation. You have expansion, and then you consolidate a little bit, expansion, consolidate right here, expansion again, consolidate. And this is actually a big consolidation and one last manipulation and expansion. So that's the sell side of the curve. On the buy, oh, I'm sorry. Let me look at some questions. I'm sorry. Actually, I can't actually see the time at price. Okay, I did that already. Where is the entry on that trade? Where would that entry be? Okay, yeah. So if you are on this time frame, you're bearish on the day. You're inside of a 1 hour PD array. You're inside of macro time frame. You have multiple entries. You're gonna have the disrespect of this bullish gap right here. This is a bullish gap where the price could come in and expand higher. We disrespected it here, right? So this could be an inversion gap, right? So when you close here, you could have your entry here, right? And then you have your stop up here. Usually the third candle that makes the gap. So you have this candle right here, and you have second candle here. This third candle could be your stop, your protection, your stop loss. So you could technically take a short here at the bodies here, or the wick, and you aiming for that 5-minute low, right? If you miss that as well, you have your change of the state of delivery happens here, and that's the last series of up close candle, right? The last series of up close candle, and if it's bullish, the last series of down close candle. This is basically an order block, and sometimes right now it's 1, 2, 3, 4 candles. Sometimes it's only 1 candle. Sometimes it's 2 candles. Whatever that last series of candles, that is your change of state of delivery. That can be your entry as well. Same stop loss. You'll be in some hot water here, but you're inside macro, you're trusting it. The other entry you could have is in that same area, the last down close candle before the up move is your breaker. But this breaker, I don't like it because it's the time frame. Let's go to 1 minute. I would probably go to a higher time frame breaker because it went right through it. Let's see if we have a breaker on a higher time frame. But we do not. Yeah, we do not. And you don't have you don't get every entry on every trade. So yeah, you would have this inversion right here on this trade, and then you would have the change of state of delivery right here, right? And the market structure shift really happens right here. So you would want 50% of the range to be respected, right? Let me remove some of this so you can see. 50%, it danced around it a little bit. This one is a little tricky because we have like body closures above the 50%, but we have displacement right here. Those are the things that time in the market is going to help you guys out with. Now, the other thing, let me see if we have SMT. Here, let me do something real quick. Let's go to the 1 hour. Let's go to 1 hour here. This one is, oh, we need ESH. As far as the wicks, yeah, the ones that's important here, I'll show you in just a second. Let me see here. Let's look at here. Where's that 1 hour gap? What time was this one? This one was March 12th at 10 a.m. Do we even have a gap? We have a tiny one here. Now, I don't use SMT personally that much, but here's what you're gonna see. Let me see here. Let me remove this. This one went through it. This one went through it. This high right here is 12. Okay, so let me add one more asset. Let's add the YM. This is the Dow Jones. Let's go to 1 hour. All right, this gap is Thursday, 9, Thursday, 9, Wednesday. Okay, Thursday, 9, doesn't it just have only this gap right here? So here you go. So if you're looking at, let's go 10 minutes. Go 5 minutes actually. You're looking at this. The SMT here, no, actually I don't. Do I see SMT? Don't really see an SMT on 15 minutes. This high, 12:15, 9:30. don't see a SMT here. So yeah, I don't see that. This one happened not to have a SMT because I'm looking at this high here. This high was taken inside the gap. This high was taken as well. I don't see the correlating. So if we had a correlate, this one is a 1215, 1215. Where's the 1215 high? 1215 here. Yeah, it's not a good example because it took all three. Yeah, it took all three highs. But say for instance, it. Oh, hold on, let me see. Maybe I see another one. This one. No. Yeah, there was no SMT here. But anyway, let's say the SMT would have been like, let's say this one took this high, this one took that high, and then this asset right here came like here. This asset would create the SMT. So if you wanted to take a short, this would be the asset that you would be shorting because these two went higher, it'd be lagging. Let me see if there's a lower SMT here. All right, so we have 315. Are we on the first? Let me make sure we're on the same time frame. 15, 15, 15. There might have been an SMT here. We took this low here. We took that low here. And we took this low here. There's no SMT here. We'll go 1 hour. Okay. Oh, we found one there. No, actually. No, this is. Nope. Nope. Yeah, no SMT, guys. Not here, at least. I wanted to find one here that took us to this gap here, and I don't see one here. Let's see. Let's go here, and this hence why I don't really like trading SMTs that much. It's too much work to find them. Here's this gap here. Oh, I think I might have found. I found one. I think. And where's the 1 hour gap here? Oh, here it is. It's all in the details, guys. All right, so here's this one. Okay, so here's the SMT here. Here's this 1 hour gap here, and then you have that same 1 hour gap here, and then this same 1 hour gap here. I actually made them too big. Right there. Right here. Right there. Okay, so this asset didn't go here. This asset didn't come here, but this one did. So if I'm going to trade bullish, I'm going to be trading either NQ or ES because Dow Jones is lagging. I hope that makes sense. So um, you get them at higher time frames, and they have them also lower time frames. But that's not something that I normally trade or use that much. It's up to you guys if you want to use it or not. I know a lot of traders use it as a confirmation, especially when you're taking a trade to move stop losses. There's usually SMTs after every retracement. To help aid with stop losses. As you, let's see, here you drop, you see this looks similar. You have to have all the assets opened up together. You see this displacement here, you see this retracement back into here, into this gap, displacement here, retracement back into the gap, displacement here. Is it the same gap? This one only has one gap, one gap. This one has multiple gaps. So it dropped more. See, bam, bam. Another displacement, retracement, displacement. Yeah, I don't really see any SMTs. So this is your original, in your market maker model. Oh, here's the SMT, guys. There it is. The SMT was at the top. All right, my bad. All right, here it is. So you see this? Sorry, guys. This high, the SMT was at the top. This high and this high. You have the market, it goes up, failed to take that high, went up, failed to take that high, went up. This one actually took the high. This place, when you can count it as a SMT, is when we have a change of state of delivery right here. Bam, once you see this, and then you see this, and then you notice this, and everyone's changing state of delivery. Once that happened, SMT. This did the same thing, this did the same thing, this didn't. It actually went up one more time, took that high, displacement, SMT. Okay, so if I'm taking the short, I'm not taking this one because this one went higher. So it's kind of the lagging asset. I would take the short on either NASDAQ or ES. Does that make sense? I don't really trade that much, but I try to explain it to my best of abilities. And ways you can see SMT is if you have a gap. Sometimes if one asset doesn't enter the gap and market structure shifts, that's a SMT. If liquidity was taken and the others didn't, as we see on this demonstration, that's a SMT. Okay. And sometimes there's time SMT where like a level might be hit on an asset early. Let's say 5 to 10 minutes early, and then the other two do it 5 to 10 minutes afterwards. That could be considered SMT, but they're a lot more complicated, so I don't really use it that much. It's just confluence. So it's Roger. SMT is like smart money, time, or smart money technique. So, what else? Okay, so another thing is time frame correlation. It's important Let me go to one screen. It's important to align your time. So if you have like if your levels, whatever your levels are, let's say we're looking at monthly levels. Monthly levels, you would be looking for like daily. You would be looking for daily market structure shift. I'm not spelling daily market structure shift. If you're doing weekly levels, then you would be interested in a 4-hour market structure shift. If you're looking at your daily levels, then you want to align it with a 1-hour market structure shift. If you want to look at 1-hour levels, not 1 hour, but 4-hour levels, then you would be looking for a 15-minute market structure shift. And if you want to do 1-hour levels, then you would want to look at like 5-minute or less. All right. If you want 15-minute levels, then you would be wanting 1-minute levels, market structures, shifts or less. Make that bigger so you guys can see. And this is how you align your time. So if you hit like a monthly level and you want to see if the market is going to reverse or respect it, then you would need a daily swing low or swing high to confirm that. If you want weekly, once you hit a weekly level, then you would be looking for 4-hour swing high or swing low to form. If you're looking at a daily level, you would want a 1-hour swing high, a swing low to form to confirm. For instance, here, let me try something else. Let's go on ES. ESH, where are you? There you go. Okay, so look at this here. We have this weekly candle here. We reached the 50%, right? We reached the 50% of that. So we need a market structure shift on a 4-hour. So we went up, right? And then we slowly came down. Disrespect this bullish. This is a bullish candle. We close above it. So the next since we close above this order block, this candle should have come up and pushed up. But since it came down below 50%, we disrespected here, market structure shift on a 4-hour time frame, change the state of delivery, on this candle. This one's kind of choppy, but the moment we close below here, change the state of delivery. So now it's confirmed that we're bearish again, right? We're watching with respect to this this 4-hour gap right here. So from 4-hour, you probably drop to your 15-minute time frame, and then you're watching. You see displacement. Let me draw. So we close below here on the 4-hour, right? So from 0 to 1, this range right here, you could expect us to return to 50% of that range right here, right? So then once you get there, you're on a 15-minute time frame. Now you want to see a market structure shift on a 15-minute time frame to confirm, right? So we took liquidity, hit the 50% of the range, bam. Another change of state of delivery right here on this candle, and you have a 15-minute bullish gap got disrespected right here, right? So now to align your 15-minute time frame, you drop to 1 minute. I hope I'm not confusing you guys. All right, so now you're on 1 minute time frame, right? We disrespected the 15-minute right here. And here is your other. Right here. Right here. Disrespected it, right? Now this smaller range, right? From here to here, we could expect the market to come back to 50%. Right here, it does. Now, you're looking for the same thing because the market is fractal, right? The market goes up, hit the range, drop, change the state of delivery. Change the state of delivery right here. Right? Displaced here. You could take your 1 minute short. You have equal lows right here. This is what I call bread and butter. 11, how many points? This is 23 points, guys. So now you've broken down the trade from a weekly level down to a 4-hour level, down to a 15-minute time frame, down to a 1 minute time frame. Now, if you want to eat, right? Once you get good enough, from this 1 minute, you can go back down to 15 minute, back up to 15 minute, right? Right. And then what do we have, right? We have a huge 15-minute gap from here to here, right? And then look at 50% of the gap. Look at that right here. So that just changed your trade because you're bearish, right? Because we're coming off. And the only reason I'm doing this is because we're coming off a 4-hour level, which hit a weekly level. So since the weekly level is stronger than the 15 level and the 4-hour is I'm sorry, stronger than the 4-hour level, which is stronger than the 15-minute level, I can expect this 15-minute gap right here. Let me change it to 15-minute to get ran through, because we came off of a weekly level. So it's nothing for me to expect us to drop down to a 4-hour level. Let's see. So this 15-minute time frame also happens to be here, a 4-hour gap right here. Right. 4-hour gap. Now, I personally, unless I have really strong conviction, I would probably take my trade off like right here and then watch. Right. You could go to 50% of this 4-hour gap, because I'm expecting a reaction. Whenever a higher time frame level gets hit, you can see it right here. Look, it hit it here. The very next candle up here went right back up here. But your entry, your stop loss is protected because it already did the damage that it needed to, right? And we're coming off of a weekly level. And here's 2 standard deviation right here. And I think, let me see, this 2 standard deviation is off the 2 minute, off the one, I believe it's a 1 minute time frame. Is it 1 minute time frame? Let me see. Yeah, it's off of this 1 minute. No, is it off of? Let me see. Hold on, guys. Give me a second, guys. I'm doing a lot here. Actually, where's 0? Yeah, it's off of a 1 minute time frame right here, because the 15-minute time frame would be here, right? So you could go intermediate time frame to this 2 standard deviation here on a 15-minute time frame, and look at this. You're eating. 15-minute time frame is nothing for the weekly level. It's nothing for the 4-hour level. Of course, you're gonna sit through, some retracements or whatever. But here, I think your TP finally hits. 2 standard deviation hits right here. Okay. So that's how you do time frame alignments. So you just would have to wait and see what happens. Okay, so if it's like Monday, like for instance today, okay, I have weekly levels marked. So on Monday, I'm looking for the market to go to these weekly levels. It could be a swing high, it could be a weekly gap, it could be 50% of the candle range, whatever the weekly level is. Then I'm looking for, I'll drop down to 4-hour and look at what happened during that time. During London session, did we change state of delivery, or are we disrespecting that weekly level on the 4-hour? And then based on that, then you drop to your 15-minute time frame, right? And then you look for the same thing. After that, if you get your 15-minute change state of delivery, then you drop to your 1 minute, look for your entry. Okay, so, but if it's a daily time frame that I'm looking at, I do the same thing. I just start from the daily level, and then I drop down to the 1 hour level. I'm looking for change of state of delivery, what happened, especially early in the week. If let's say you had some levels early in the week, a daily level, and then you come in Monday, you don't trade, and then Tuesday you come in, okay, all right, so Tuesday already happened. Did we reach a daily level? Yes. Okay, so drop to a 1 hour. did we see anything on the 1 hour? Did it also change state of delivery after we hit the daily level? If it did, okay, good. Then we could drop to lower time frame. If it didn't, we wait. Look for either a continuation and disrespecting those levels. After that happens, you drop to your 5 minute, and you're just looking for the same thing. Once you're in your 5 minute, 5 minute or less, and then you get your entry. Does that make sense, guys? I don't know. I just threw a lot at you guys real quick. Give me a yes in the chat. Any questions? Are you guys there? Anybody? No? Any questions? Are you guys there? Anybody? No? All right, what's the question, Roger? All right, what's the question, Roger? No. Yep. Okay. Nate, your brain is mush, man. Come on, man. Hey, if we keep doing this, it will come, bro. It takes time, um, and you're gonna eventually, if you just, you keep at it, um, you'll it'll slowly come really fast. I don't know if I do a good job of presenting it, because at this point I just like it's like more like reactions for me. Um, but like it takes some time, and it'll slowly come, bro. So I want like let's look at this high. Oh, is it another? Hold on, let me see. Let's see what other questions we have. If your trading is a language, I'm still learning the words. But is it like making sense to you though? Roger, the best time frame is it just depends on what you trying to trade, right? I would say like a higher time frame, because the candles take a little bit longer to develop, so you can see it. So I would say like 5 minutes or higher. But being day traders, you kind of want to look at the daily levels, and then you want to be aware of the weekly levels, and of course you want to be aware of monthly levels. So if you're gonna um for a beginner, I would look more like at the daily levels, And then from the daily, like here, we're looking at this right here. I would drop to the 1 hour. So we hit here. We hit, all right, so previous day low was right here. We hit that level here. You see multiple time. We have a 1 hour gap here, right? We have a 1 hour gap here. Right? And then we have the 50% of the candle range up here. But before we have the 50% of the candle range, we have a 1 hour intermediate high because it's inside of a gap, right? So this would be the draw on liquidity. And look at this, they be playing games, man. So I would have this as buy side. Okay, so on the 1 hour, we did go in here, we rejected, hit 50%. I mean, not 50%, hit previous day low, right? So we're just watching, we're watching. It came up and then dropped, right? Now, market at 8 o'clock, 8 a.m., we got this expansion right here. This is an order block, right? The last series of down closed candles, right? This is an order block. Right here, we have a 1 hour breaker as well, right? Let me make that green bullish breaker. Yeah, so these green candles are bullish breaker, and a bullish breaker is just a failed order block, right? Because if you look at this series of candles right here, this is an order block, right? A bearish order block. You see, we close below it right here, and then when we come back to it, look at this. We opened here, went up and reject. This candle here went all the way down here, right? I think we even have another, hold on. Yeah, okay. So you can see the reaction from these two candles, because we want these candles, these green candles, to hold price down. Once we close below, it's confirmed, right? And then you see we touch it, and then these are 1 hour candles. So these are still short opportunities. You see we come into it, close here, we open, drop. That's a short. I don't know how many points this is, but damn it, it's enough. Let me see. That's 16 points, man. That's more than enough. We come a little bit higher. You see it come, and then we dropped even more. So it's respecting it. We come to 50%. Nobody's closed above it until here, right? Right. But all this, if you have a short on a lower time frame, you have your stop here, or here, and then you take a short. Look how low it goes before it blasts. This is like insane. From it'll be choppy, but oh, it's like what, 35 points, man. You know? But then it create this order block, right? Notice that this one got mitigated after it closed here 50%, right? Right? So it mitigated 50% of it. And then it created this order block right here. This bearish order block, the body closed here below the body, but nothing closed below here, right? So we closed above it right here. So that activates the bullish order block. We opened, came down, nothing closed below it, right? And then so that tells me I'm looking for bullish prices, right? And then where's a target? A target could be here. This high is here inside of this gap, and I have this target here. So from here, I'm dropping to 5-minute time frame. Right. This is actually really nasty price action right here though. Nasty price action. We closed above here. Right. And then we drop. We close above here at 8:30, right? And then after 8:30 we drop. Where do we drop to? We have a 5-minute gap right here. 5-minute. And then like as it's dropping, I'm just watching price, right? Because like I don't know, it could close below here and just invalidate my trade on what time frame was that? That was on the 1 hour level. So at 9, it could technically close below here, and then that would invalidate the trade because then that would be a close above and a close below. That's a wick on a higher time frame. Then I would be looking to go back into it and then the short. Okay. So market open 9:30 here, right? We close below, right? Here. Wick took this liquidity. Wick closing here. Now, I'm still watching because like this closed below 50% of the 5 minutes. So I'm still not sure, right? I have this 5-minute gap right here. We closed above it, right? And then we close below it. Wick again. And then pushed up. We finally get a change in the state of delivery. The last series of down close candle before liquidity was taken is here. So on a 5-minute time frame, change the state of delivery will happen here. Here, right? So this is unless this series of candles go below this candle, I'm looking at this one. Okay. So what happened? We wait, bam. At 10:25, we close above it right here. All right. So now at 10:25, you could actually, let me see where you could take your trade on this, on the close of here. Once this close here, you could take your trade here. Yes, you could long here. Let's see. But you'd sit in some drawdown. At 10:25, it closed above it, right? But I like to wait till that 45-minute, that macro time, to get that that good entry, right? Because that's when price want to spool, right? So then I'm waiting. 10:45 is here, right? So I'm already bullish. So I put my entry here at 45. You could put your stop below the 15, I think a 1 hour gap right here, right below it, right? We already came, right, and mitigated this 1 hour, right? This 1 hour fair value gap. If you go to 1 hour, where are you? Yeah, on the 1 hour time frame, you can see that this wick right here laid the roadmap. So now it's free to go, right? So that ain't even my target anymore. Yes, you can take something here if you want, but that's not my target anymore. My target is up here. This liquidity here, right here. So, bam. You get in 10:45. You know, if you want to wait for this 5 minute gap right here to close, right, to get disrespected, right here, right here. You know, you could also wait here, you know, but I'll still be waiting. What time? 11:15. Let me see, right here. At 11:10, you get another entry that's inside, still inside that macro, right? You're going to suffer some drawdown, right? And then look at this. Look at this. Right to target, which is a 1 hour gap that's inside, right? It could potentially go to this 50% of the daily candle range, but this is low hanging fruit right here. This was low hanging fruit. If you're really sure, you could take it on a lower time frame. This is low hanging fruit, right? And then here you can do your measurement. This low to this high right here. There's standard deviations. It went to 1 standard deviation. This is 46 points, bro. Like, come on, man. You know, like 5-10 points consistently will make you a millionaire, man. So during this 46 points, man, 10, 15, 20 points, 5, 10, 15, 20 points, be content. Walk away. Right? So it hit 1 standard deviation. It never came back, look here, to mitigate, you know, this area. So it did, right? I wouldn't still be in this trade. You know, I would be taking profit, you know, but some people, you know, they're looking for longer trades to possibly hit up here. You know, they'll weather this drawdown. You know, I don't like it. So, because it could completely reverse on you. You know, actually the next day here, let's go on higher time frame, get this faster and see what happens. Let's go 1 hour, not 15 minutes, okay. To 30 minutes. You know, well, came back down and then took you out. Did it take you out? Actually, it didn't. Hold on, let me see. But I wouldn't like this disrespect of this gap. This breaker right here, I don't like this. So, but you know, that trade you were in on that Friday, and this is like all the next week. Next Tuesday. So, yeah, and it took you out. It disrespected this, right? And then what it did, it went back, rebalanced, right? Look at this. Rebalance 50%. Wicked. Drop. Took these lows right here. Actually, I think it took these lows right here. Yeah, it went back, rebalanced 50% here. And then took you out here. Took these lows. So that's how you can reverse your breakers from a bullish breaker to now a bearish, right? We took some liquidity here, right? The last candle right here. Here's another, you could technically, let me see, is that, what time frame is that? Let's see, 1 hour, 30-minute. Bearishness. All right, yeah. Here. Hold on. All right, there. Okay, yeah. Took liquidity here, right? Displace, right? Came back up 50%. Took out this liquidity here. So that's how you can flip and reverse it. But I still use higher time frame levels. So this trade was based off the daily low, previous day low. We took the low, right? And then the draw on liquidity was 50%. This buy side, this is low hanging fruit. You have 50% of the range. If it's really bullish, then we'll go up to 2 standard deviation and perhaps the daily time frame. I don't know that, but all I knew is low hanging fruit right here was easy peasy. I just need to get the direction right and then take my few points and then walk away. Let the contracts do the work. All right, I think I see some more questions. Nate, yeah, you ready? You willing to put in the time? It's already better than a few months ago. Yeah, that's what's up, man. Is there a significant difference between NQ and? Okay, so I noticed that this week you have the monthly contract up, and so the it's not really that much difference. It's just here. They're very close. The volume changes. If you go to bar chart, like every 3 months, we have a new contract. It's just the weekly the contract level is as you can see, the volume changes, right? So I actually use both. Like for ES, let's say for ES, let me pull up the continuous one. ESH 2026, that's the current contract that we're doing right now. But if I go to ES, this is ES, the continuous contract. That's just an exclamation point. Where's my? Yeah. All right. So this one, look at this. This one has data just like the last 3 months, right? 3 months moving forward. This one has all, like I can go monthly, let's go weekly time frame, all data from like months and years. So both are needed. See? Yeah, this one and then this one. If I go 3 months, this is all the data you have right here. All right. So this is what like most people are trading, but for historical reference points, you can still trade on this as well too. But for historical references, you use the continuous contract. Okay. You set your, yeah. Nate, you have to do both. You have to do both. Yeah, you have to do both. Sometimes, one will hit, and the other one won't. Yeah, it happens. It happens. I don't know. I think it could be like CME, something up with the CME or whatever. But yeah, you have to do both, man. All right. So, any more question, guys? How long we been going? Oh shoot, man! Hey, the market's about to open in like 6 minutes, guys. We got 2 solid hours in, man. Come on, man. Anything, guys? Did I overload you guys with too much information? There's still more. This is just like the beginning, bro. Roger, you good, man? All right, guys. Yeah, Nate. You can rewatch it. Um, like I said, the market's gonna open in like 4 minutes. I probably won't trade this week until like I'll probably trade Tuesday. Monday I'll let it consolidate. Well, I'm not expecting anything big. But I can I'll text you guys, you know, not every day, but once or twice this week to give you some information, what I think the market's gonna go, and and let's see if it happens or not. But anyway, guys, that's it for today. I'll see you guys next week. If you have questions, confusions, just shoot me a text or call me or whatever. And yeah, man. All right, so have a good one, guys. Deuces.